Time now for some business news. We begin with a ransomware attack on the Industrial and Commercial Bank of China. Camille Knight from our business desk is here with us for more on that story.
That's right. We're talking about China's largest bank, in fact, the world's largest. And apparently it's its US unit that came under attack. The bank says it has now contained the hack, but it did disrupt trades in the US Treasury on Thursday. Now, the way ransomware software works is it can paralyze computer systems until a payment is made. Traders and bankers say the hack prevented ICBC Financial Services from settling Treasury trades on behalf of other market participants. So the bank was forced to send settlement details by messenger carrying USB sticks around Manhattan as it raced to limit the damage. It's suspected that Lockbit may be behind the attack. It's a prolific criminal gang with ties to Russia that has also been linked to hits on Boeing or the UK's Royal Mail, for example. The impact of the hack so far does appear limited, but it does signal how vulnerable systems can be to cybercriminals and is likely to raise questions over market participants' cybersecurity controls. Violent protests continue in Bangladesh over pay for garment workers. These demonstrations have been going on for 2 weeks now, and so far 3 workers have died in the violence. It's also forced many factories in the country to close, paralysing the world's second biggest garment manufacturing hub after China. Unions say the proposed government increase to $113 per month doesn't keep up with inflation. They're asking for about double that. Take a listen to this union leader.
We've heard that the ministry has announced a minimum wage of $113. It's hard for the workers to live on that wage. In this market with inflation, it's a travesty. It's clear that with this new wage proposal, our government and business owners are only looking at their own interests, ignoring how workers live right now. We, the Garment Workers Movement, and 4 million workers reject this proposal.
China's International Import Expo wraps up today. It was an opportunity for China to encourage foreign businesses to return to the mainland and comes at a time of mounting trade tension between China and the West. Caroline Lamboli has more.
Visitors were back at the International Import Expo in Shanghai after 3 years marked by the COVID-19 pandemic. This year's edition also took place in a context of mounting trade tensions between China and the West. With China's economy struggling to recover from the pandemic and a real estate market crisis, the expo was an opportunity to reassure foreign firms.
We will further relax market access, implement relevant policies such as comprehensively lifting restrictions on foreign investment access in the manufacturing industry, protecting the rights and interests of foreign investment in accordance with the law, and continue to create a market-oriented, legal and international business environment.
This year's edition included more than half of the world's Fortune 500 companies. Thousands of businesses were represented, including many from the U.S.
We have the largest number of businesses and exhibitors this year. I think that shows the commitment of the United States to this relationship.
Though trade remains strong, U.S.-China relations have hit some bumps over the past years. The U.S. has imposed sweeping export controls on sending chip technology to China, and it has banned some U.S. investments in certain sensitive technologies in the country. Many exhibitors came to scope out the opportunities of the growing Chinese market. Others were looking out for Chinese foreign direct investment, a sign that despite the challenges, the world's #2 economy is still a draw for foreign firms.
Now let's take a quick look at the markets. Asia-Pacific markets fell on Friday after US markets set that tone overnight. The Hang Seng Index leading those losses. And it comes after Fed Chair Jerome Powell said in a speech that the central bank thinks more may be needed to bring down inflation. In Europe, meanwhile, a similar picture with markets retreating this Friday morning. FTSE and CAC 40 both down by about 0.5%. We've also got news out of the UK that its economy stagnated in the third quarter. Do we end on a slightly higher note with a bestseller? Yes, Britney Spears' memoir remains the top-selling book in the US in its second week of publication. The Woman in Me sold just over 132,000 copies last week, quite a drop from the 400,000 physical copies sold in its first week of publication, but enough to keep it in first place. The audiobook, narrated by actress Michelle Williams, pushed those first week total sales up to 1.1 million. Critics have praised Spears for a compelling account of her troubled life in Korea, notably showing her conservatorship that was concluded only recently.
It's a welcome boost for Britney. Cami, thank you so much for that. That's Cami Knight joining us there from our business desk. Well, one woman is dominating